and welcome to another TLC Tutoring accounting lesson. Today we're going to be going over payroll entries. So this is going to include the initial payroll entry as well as the company's related payroll tax entry. So in this example, we have ABC Company that has total salaries and wages of $1,650 for the current week, and they have the following taxes that have to be withheld from that gross pay. Now they want us to journalize the entry to record the company's payroll for the current week. So first things first, I do want to talk about the difference between gross pay and net pay as it relates to payroll. So an employee's gross pay is the total amount that they earn during a pay period. So whatever hours they work times their hourly wage with any overtime in mind. Now, in this case, you'll notice we have all of these taxes: a federal withholding tax, sometimes called federal income tax, Social Security tax, Medicare tax. These are the three taxes that the employer is required to pay. Now, keep in mind, if you do work in a state that has state tax, this will also come into play. But generally, we're focused on those three taxes: federal withholding tax, Social Security tax, and Medicare tax. So of this $1,650 that we have for the employee's gross pay, we're going to have to take these taxes out of their paycheck, and the difference that we find will be considered their net pay. So let's go ahead and talk about what entry would be required for this actual payroll that we have up here. So since they didn't give us a date, let's go ahead and leave that blank. We'll focus on the debits and credits. Now, for the gross pay, this is going to be considered an expense for the company. So in order to recognize this expense, we debit salaries and wages expense. For that full gross pay. Because even though the employee might not be getting that full $1,650 after we take out the taxes, that doesn't mean that we get to keep those taxes. We actually have to pay that to the government. So next, let's talk about these taxes up here. As I said, we don't get to keep those taxes. We have to pay that to the government. Typically, we don't pay those right away. So the general way that these are treated, particularly in academic accounting, is it's a liability for the company. They owe that money. So the company's liabilities are going up for each of these taxes. So think, how do we increase a liability account? By crediting it. So we are going to credit each three of these tax amounts. Now keep in mind that in order to make this a liability, we can't just write federal withholding tax. We have to make it a payable. So federal withholding tax payable, Social Security tax payable, so on and so forth. $285.40 for federal, $99 for the Social Security, and $24.75 for the Medicare. Now, at this point, you'll notice that my debits do not equal my credits. And as we know with all journal entries, our debits must always equal our credits. So let's go ahead and find out what amount I would have to plug into this credit side to make the sum of my debits equal the sum of my credits. All right, so I'm going to find the difference between both sides. I have $1,650 in the debit side, and I'm going to minus out all of those credits. So we find that we need a credit of $1,240.85. Now this amount, their gross pay minus all of their taxes, that is their net pay. That is the amount that they are going to receive on their paycheck. And in this case, we are going to assume that we are not paying this today. We're going to be paying this at a later date. So we are going to be crediting salaries and wages payable. Now keep in mind, if your problem says that we are paying off this payroll today, then that would just be simply a credit to cash. All right, now that we dealt with the payroll entry, let's take a look at this second requirement down here. They want us to assume that the company's SUTA, state unemployment tax, and FUTA, federal unemployment tax for this pay period, are $89.10 and $13.20 respectively. So $89.10 for SUTA, $13.20 for the FUTA. Now they want us to journalize the company's payroll tax. So you'll notice up above, we just went ahead and journalized the company's payroll for the week. This is asking for payroll tax. You might be asking yourself, well, we already recorded these taxes. A company, when they employ someone, they don't only have to pay that employee whatever they earn, they also have to pay taxes on what they're paying that employee. So in this case, we have $89.10 for SUTA and $13.20 for FUTA. And in addition, the employer is also going to have to match Social Security of $99 and Medicare of $24.75. Now there are some ceilings, so if you have to calculate these numbers yourself, pay close attention to those ceilings as well as whatever percentages your textbook uses. So in this case, we are going to have to record that the employer is going to have to pay FUTA, SUTA, Social Security, and Medicare. So I'm going to go ahead and record this expense right away, the payroll tax expense. I know it's going to be a debit because those expenses are going up. But I'm not going to put a number in there yet because I first want to go ahead and put in my credits for all of those taxes that are payable. So the employer is going to be paying Social Security tax payable, Medicare tax payable, SUTA tax payable, a little redundant there, but that's okay, and FUTA tax payable. So in this case, the employer is going to have to match the employee's Social Security, so $99. The employer is also going to have to match that Medicare tax payable, $24.75. And they have SUTA of $89.10 and FUTA of $13.20. Now at this point you might be tempted to make an additional payable account here, but we do not need any type of salaries and wages payable down here. That is only for the amounts that we have to pay to the employee. In this case, once we go ahead and make this debit and credit balance, we will be done with our journal entry. So let's find the total amount of tax that this employer has to pay. $99 plus $24.75 plus $89.10 and $13.20. So the employer has to pay a total of $226.05 to the government for those payroll taxes. All right, so these are the two entries required for payroll. One to record the actual payroll that the employee has to pay, that's Social Security, federal withholding, and Medicare, and the taxes that the employer has to pay, Social Security, Medicare, SUTA, and FUTA. All right, so keep working on this. A lot of times it takes a few times to really get this concept down. Leave any questions you have in the comments below, and until the next video, happy studying.